According to recent data from the Federal Reserve, 57% of adults in the United States cannot afford a sudden $1,000 emergency expense using their savings. Instead, the majority of people are forced to rely on high-interest credit cards, borrow money from family, or sell off valuable personal assets just to get by. This reality highlights a massive problem. Saving money is incredibly difficult when we rely purely on willpower. Every single day, we are faced with decisions to spend, and our brains are naturally wired to prefer instant gratification over a future safety net. But what if you could completely remove human willpower from the equation? By building a $10,000 emergency fund using modern artificial intelligence and smart banking automation, you can establish a secure financial foundation without ever having to think about saving again. The traditional way of saving money is fundamentally broken. We are told to write down our expenses, create a strict budget, and manually transfer whatever is left over at the end of the month into a separate account. The problem is that there is rarely anything left over. We adapt our spending to whatever balance is visible in our main checking account. To break this cycle, we need to make saving invisible, automatic, and highly intelligent. The first step in building your automated emergency fund is establishing a smart financial audit using artificial intelligence. You do not need to spend hours scrolling through old bank statements or manually inputting numbers into a spreadsheet. Instead, you can leverage free and low-cost AI personal finance applications that link directly to your existing bank accounts. These tools use secure, read-only connections to analyze your last 90 days of transactions. Within seconds, the machine learning algorithms categorize every dollar you spent. They identify your fixed costs, like rent and utility bills, and separate them from your variable expenses, like dining out and entertainment. What makes these AI tools incredibly powerful is their ability to detect patterns that the human eye misses. For example, the AI will scan your transaction history and flag forgotten, recurring subscriptions. Many people are paying for streaming services, gym memberships, or software applications they have not used in months. These small, $15 monthly charges silently drain your accounts. By using an AI assistant to identify and help you cancel these unwanted subscriptions, you can easily reclaim $40, $80, or even over $100 a month. That is cash that can immediately be redirected toward your $10,000 goal. Once you have a clear picture of your cash flow, the next phase is setting up the micro-saving engine. This is where artificial intelligence truly shines. Traditional automatic transfers are rigid. If you set up a manual rule to transfer $50 every Friday, you might run into trouble during a week when your car insurance is due or your paycheck is delayed, leading to frustrating overdraft fees. AI-driven saving algorithms solve this problem completely. These algorithms monitor your checking account balance and daily spending habits in real time. They learn when your utilities are paid, when your paychecks land, and how much you typically spend on weekends. Armed with this data, the AI calculates a safe-to-save amount every few days. If the algorithm detects that you have a little extra room in your budget, it might quietly transfer $7.40 into your savings. If it notices that your balance is lower than usual or that a major bill is due tomorrow, it will pause all transfers automatically. Because these transfers are small and happen in the background, they are virtually invisible to you. Your brain quickly adapts to the slightly lower balance in your checking account, and you unconsciously adjust your daily spending. Over the course of a month, these tiny micro-savings can easily add up to hundreds of dollars without you ever feeling a financial pinch. Now that the money is being saved automatically, we have to talk about where that money actually goes. Keeping your emergency fund in a traditional checking or savings account at a major brick-and-mortar bank is a massive mistake. Right now, the average traditional bank pays an interest rate of just 0.01%. If you keep $10,000 in one of those accounts for an entire year, you will earn a measly $1 in interest. Your money is actually losing purchasing power every single day due to inflation. To optimize your automated emergency fund, you must direct your AI transfers into a high-yield savings account, often abbreviated as an HYSA. These accounts are offered by online banks and are currently yielding interest rates between 4.5 and 5%. The difference this makes is staggering. If you have $10,000 sitting in a high-yield savings account earning 5% interest, you will earn $500 a year in passive income, entirely for free. The money is completely safe, fully liquid, and insured by the Federal Deposit Insurance Corporation up to $250,000. To make this system work flawlessly, you simply link your AI micro saving tool directly to your high-yield savings account. The money is swept out of your daily checking account by the algorithm and deposited straight into your high-yield account, where it immediately begins compounding and earning high interest. We cover this on Stacked AI because understanding how these digital systems connect is the secret to building hands-free wealth. By letting technology do the heavy lifting, you build a barrier between your daily spending temptations and your growing emergency fund. To supercharge your progress toward the $10,000 mark, you can also implement automated roundups. Most modern digital banks and financial apps offer a feature that rounds up every purchase you make to the nearest dollar and transfers the difference into your savings. If you buy a morning coffee for $4.30, the system rounds the transaction to $5 and sends the 70 cents to your high-yield account. If you buy groceries for $82.10, 90 cents is saved. On their own, these amounts seem insignificant, but the average person makes about 40 transactions a month. By rounding up those purchases, you can easily save an extra $30 to $50 every single month completely on autopilot. It is the digital equivalent of throwing your spare pocket change into a jar, except the jar pays you 5% interest. Let us look at the actual math required to hit a $10,000 emergency fund so you can choose a timeline that fits your lifestyle. If your goal is to reach $10,000 in 12 months, you need to save approximately $833 per month. That breaks down to about $27 a day. If you want to reach the goal in 18 months, you need to save $555 a month, or $18 a day. If you prefer a more gradual 24-month timeline, the goal is $416 a month, which is about $14 a day. When you break these numbers down to a daily level, the goal of $10,000 becomes far less intimidating. By combining a few simple automated strategies, hitting these daily targets is highly achievable. For example, if your AI subscription manager saves you $80 a month, your AI micro-saving algorithm saves you $200 a month, and your automated roundups contribute $40 a month, you are already saving $320 a month without changing your lifestyle. To bridge the remaining gap, you can set up a fixed automatic transfer aligned with your payday. The moment your paycheck hits your checking account, a fixed percentage or a set dollar amount should immediately be routed to your high-yield savings account. Financial experts often call this paying yourself first. By automating this transfer to occur within hours of your direct deposit, you ensure that your savings goal is prioritized before you have the chance to spend any of your paycheck on discretionary items. If you are someone with an irregular income, such as a freelancer, a contractor, or a commission-based sales professional, this automated approach is even more valuable. Irregular income makes traditional budgeting incredibly stressful because you never know exactly how much you can afford to save. AI algorithms excel in this environment. During a high-income month, the AI recognizes the larger deposits and automatically increases the frequency and size of your transfers. During a lean month, the algorithm scales back, protecting your checking account from running low. It creates a self-balancing system that perfectly matches the rhythm of your career. Building a $10,000 emergency fund is not just about having a number in a bank account. It is about the profound psychological peace of mind that comes with it. When you do not have savings, every minor inconvenience feels like a major crisis. A flat tire, a dental procedure, or a temporary reduction in work hours can throw your entire life into chaos and force you into a cycle of debt. Once you have that $10,000 cushion, those emergencies are downgraded to simple inconveniences. You can pay the bill immediately, move on with your day, and let your automated system quietly rebuild the fund over the following months. To stay updated on the best ways to integrate these modern technological shifts into your daily life, follow along on Stacked AI. The tools to build financial security are more accessible today than they have ever been in human history. You do not need a high income or a background in finance to build a substantial safety net. You simply need to set up the correct digital pipeline once, step back, and let the technology do what it was designed to do. Within a few months, you will look at your high-yield savings account and realize that you have built a life-changing financial cushion completely on autopilot. This is educational content, not financial advice.